Okay, Wednesday, December 21, 2016. Okay. I just have an SPX up here. This is on a daily. Okay, these are logged charts. So if I go back, let's try quarterly here. Okay, so basically, excuse me, this is from the late 40s after the war. I can go back even further here. Let's take a look at it. Okay, since this is one of my concerns here. Okay, basically a logged chart. Everything going with the baby boom, the boomers getting where are we into the 90s when they're in their money making years. Okay, I do the GAN thing because it's psychology. Okay, I kind of read how people say what they say in these chat rooms, things of that nature. So, we know that the lifespan of a day trader is 9 months. Okay, if they're all giddy, then I know that the majority are definitely going to be wrong, right? That's just kind of how it plays out. Now, this is just the S&P. Okay, there's enough issues in it that over time the hubris falls out. Your Polaroids and all that other fun stuff, they come and go. Okay, so we add to it. But on the GAN type deal here, this little pattern here, I have to stand by and say that this is a wave 4. Okay, now you have population growth, the amount of debt that's outstanding, and things of that nature that get pushed into the stock market. Okay, so how I lean that this is one way or another that this is a wave 4. Okay, all right. Now what I'm concerned about, okay, is the angle of ascent that we're currently in. Okay, the NASDAQ 100, not as much. It was the leader this year and it stalled. Now the Russell took over, the Dow's up there, and the S&P. Okay, so as a logged chart, you basically can just eyeball the whole mean here. It's just running along, right? Dead center on it. Okay. Now we're up to a monthly on here. Okay, this is going into the .com, so the NASDAQ would have been the flyer here. At the bottom and the upward, this is the top of the real estate market. This is the real estate phase. And this is the washout of that, and that pretty much commiserated, if that's the right word, to the baby boomers. And now we have this huge run up. Okay, all right. As you can see here, when the boomers and the technology, we had a sharp angle of ascent. Okay, and that's the current thing that I'm worried about, is that because of what's happened post-election and those indexes that have broken out, there's a lot of air underneath. Okay, so what I'm getting at is, as I run through all the charts, okay, you get a run up and a pullback, you get a run up again, and then things kind of wobble here yesterday and today, right? We know that there was a lot of call buy-in over this last period of time. Do I have it on here? No, not there, here. Okay, I want to just point out one thing real quick here. All right. Here you have, this is VanEck Vector's Russian small cap, okay? So the beginning of the year, they moved up with the commodities, and it's still marching along, and the ruble was appreciating currency, okay? But what you have here is you have a lot of volume, okay? It basically gapped, and it's just resting on S2. This is a daily. But what I'm seeing, you have a lot of volume all in this area. So you have a lot of people that jumped in right here. Okay, so this is what I'm talking about with air. What they need to do is, if the bulls are still in charge, they need to get away from this area. They have to move forward here. This is, as you push higher, you want to see an increase in volume. That's new money coming in. But when you see a spike in volume and prices not going anywhere, you have an equal amount of sellers that are there also, right? I mean, if people are buying and it's not going anywhere, something's not right. So that's why I need to, be a little cautious here when you're going through your own individual stocks. Okay. Basically just a couple of moving averages here. So throw a 34 period and 144. Okay. And the cloud type of deal. But the thing is I pointed out today that Brent might be working on a head and shoulders. Currently oil is 52.67. Okay. The deal is I'll respect this, but my concern is that there's a whole bunch of volume in here. Now this is just Russia, okay? And as I go through the other indexes, New Zealand and India and others, there's a lot of volume like this that jumped into the equities, okay? And there's been a lot of collapses, okay? And they're getting their bounces and more volumes running in, okay? So it's basic how I read it, it's the last people to show up are getting in, okay? And like I said before, my concern is that the angle of this, there's no room for failure here, okay? Now we do have Thursday and Friday to go. We have GDP tomorrow. If the bulls are still gonna be in charge, they definitely have to get this out of here. They also have next week. It's one of those deals that you have, the whole year end deal, this, that, the other thing. But like I said, I'm cautious because of all the heavy call buying. If you're a market maker on the floor and you just sold a lot of calls over the last couple of weeks, you're definitely going to want it to go the other direction. And you and other market makers are going to want it to go. So that you don't have to say anything. You just know that you need this thing to come back down. Like I said, my concern is the angle of ascent. These are logged charts. Okay. So, as it's, if you draw a trend line underneath here, you get a nice gentle, they usually start off at 30 degrees. Then the markets go to 45 degrees as they trend for a while. And then things change and all of a sudden you get 70, 90 degree angles. Now, these are logged. So we're talking like exponential type, looking stuff here. There's a lot of movement in a short period of time. And how I look at this and how far we're in, and we have the interest rate thing. I have to be concerned that if these lows don't hold, there's going to be a lot of air underneath this. Okay. And that's how that was my concern after today. Okay. So we have the move where there's heavy put buying down in here before the election. It took off running, had a shallow pullback. Okay. Ran up again. And then here's our, FOMC reversal bar, right? So we knew ahead of time that there were a lot of call buyers in here. And it basically gave you the whole one-day deal, right? And I wrote that they never make it that easy. But my concern here is that if we do, we're working on a little triangle type here, right? Which is technically a continuation pattern. So the GDP number needs to come in here and that kind of thing. There's no room for error because of the angle, the amount of call buying that we've had, and things of that nature. So this thing has to continue forward. We're dealing with the time we're dealing with a tightening cycle. If you go through your individual issues that you have in your portfolio, some may have peaked in 2013, 2014, and they're half back. For some that may be it. But like I said, my only concern is that this angle here, I have a tough time swallowing that if we do pull back at all, that we ever get back up here, during this cycle. In 1987, we still closed up for the year, but we fell 20% and then we fell another 25. I'm not saying that this is another 1987, but the psychology is there. A whole bunch of call buying up here, and it won't take much. I mean, just here in the S&Ps, you take out the Wednesday reactionary low for FOMC. All of a sudden now you begin to leave this up here, and then you're going to test this, and most technicians are going to say, okay, this is another retest of the breakout. Okay, if that fails, then what? You're going to start putting, now you're at 2280, 1900. Now you're back, before you know it, you're back to 1800. So the deal is here is, like I said, is my only concern is that, you know, what we need to do is mark some time like here and then move forward. That's, you know, digest those call options and then move forward. But just stay on your toes, you know, and you know, like how I look at it is, you know, every day that goes by, we're closer and closer to a recession. Okay. This is S&P. Let's go ahead and look at the Qs and stuff like that. Go to the Qs, which were the leader for the year. And then the Russell took it back over again. Okay. So basically you have chop, 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 chop. All right. So now it broke out basically the same time. It had a reaction to give it to the bulls. We'll just say that this Wednesday's reaction was just a retest of the previous highs. We also have the rest of the shopping buying, you know, but basically the numbers are there. Whatever's there is there. I saw Abercrombie and Fitch, they're falling apart. You know, it's just one of those things. They call it Black Friday because that's when retailers actually go in the black. So could you imagine going almost a full 11 months before you know, got in the black? so, you know, the event, you know, it's kind of like Amazon in the next recession. How's it going to handle it? Because Amazon is nothing but a glorified Sears Roebuck catalog, you know. But, you know, like I said, my only concern is the angle of ascent that we use, not as much here with the Qs, but it's the same type deal. It broke out, right? So breaking out, it has to hold it up here. You know, if it comes back in here, I think that a lot of these are going to slice through the bottom. Let's try IWM. Same type of deal here too, except for this pattern got about half back and then pulled back, okay? Same type of deal again, you know, if you're a technician or whatever, you're going to say, okay, this is the breakout, you know, at 125. Well, now all of a sudden you've dropped, what, 10%, okay? The same type of deal, I mean, before you know it, you know, and that's the other deal too, is that, you know, when you look at the big picture, you know, when you're in a bull market, everyone's going to be long pretty much, right? That's how it pushes higher, okay? Same type of deal here with this pattern. You can take a look. It actually breaks out, comes back in, kind of mushy there, goes up, has a hard reversal pattern here, takes up multiple weeks, pokes its head through at 126, and then all of a sudden it's at 982. So the same type of thing again here, you know, here would be drawing your trend line across 125, 126. But like I said, my concern is if we can't hold up in here, I really don't think that these will hold either, okay? I'm not saying that that's going to happen. It's just one of those things that, you know, from what I'm seeing underneath on here, you know, if this is what, if buying all the puts down here and your post-election, you ran away from it and all of a sudden they're coming in and buying calls left and right, okay, you know, this may be it. I mean, if it loses, if the IWM loses, you know, 134.81 area, you know, you're going to get an unwind, and there's going to be an unwind and other things too, possibly the Japanese yen unwinds. You have the dollar, things of that nature. I mean, basically we've had piling on since what, 2009, and then we get this sharp angle of ascent. We get some serious call buying. You know, half the population is really giddy for POTUS, you know, and the other half, they're just whatever, you know. I kind of look at it as a puppet, you know. I don't think of the man when I get up in the morning and go to work, right? You know, as what psychologists say, that you're in it for yourself, kind of thing. But you know, for the younger ones, the older ones understand how quickly these things can get away in a hurry. I mean, before you know it, you're slicing right through here. And the other one too is 2008 and 9. Well, in 87, the computers couldn't keep up when we were slicing. And I believe in 8 and 9, we never did hit limit, I believe. We never traded limit. I don't think the collars came on. We've adjusted the collar somewhat. We've also added in circuit breakers now, I think, in some individual issues. I think they're ETFs, ETNs, I think it's 10%. But the deal is when something's stalled like that, it builds up pressure behind it, okay, because of it's just it's the nature of the beast. To get it to go up, people have to buy, and you're basically playing mumbly peg or chicken with top tick. Like I said, I'm happy for where it's at and everything, but like I said, the whole angle of ascent is just a little too sharp for me for right now. So it's one of those of, just be careful on that. Let's see here. Here is the world famous Dow. Okay. But Kev, look at this angle. That's fine. Yes, I know. Okay, this is coming off of the February lows, and we get it. But then we ended up going sideways. So once again, I guess these dots actually work out swell. Okay, this is your SAR. It's the standard 2 and 2 on here for your SAR. How did it work here? It worked. Then it moved down a little bit more. Kind of get that running pattern there. Okay, but just. What do we have? So S&Ps are down 3, 22.57. Like I said, I honestly, I think there's nothing but air underneath here, and you guys got to be very, very, very careful. I'm like I said, I think I have the stock market doubling, but that's to go along with the real estate cycle. We're talking 2024. Okay, so we're talking, what rule of 72, figure that one out, then that's basically your return on here. But to me, I mean, you look at, here's a weekly, it's kind of nice moving, blah, 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 blah. And now the angle of ascent is just so sharp on here. Okay. It's just a word of caution, I mean, because these are logged charts, this is some serious work on here. I went back and looked at the tops of 07, 2000, and 87. This is sharp. Okay, so what I'm getting at is that all of a sudden, here's a weekly on the Dow, up, 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 and then all of a sudden, even if you want to retest this, there's a lot of space overhead. Okay. Let's take a look here. Some others real quick. Yeah, see, this one's kind of flagging out right there too. Yeah, we got to be very, very, very careful, because the deal is here is you could have a whole bunch of unwind. The deal is it can be sharp. I mean, here's the other thing too, is VIX just rolled over, and we had VIX down to, it was under 12, the VIX futures. So, it's not that it's going to happen. It's just that everything is right. Okay. Where are we at now? And the S&P is down 3. Okay. So like I said, I'm going to leave this at this here. But like I said, it's only if we can trade sideways and digest some of this sharp movement, that would be fine. But the other thing is I'm also, I'm focused on that, our new administration causes havoc with folks. You just, the best you can do is, go with what, what's going on with the market. March. Then we had a whole sideways digestion, And then we broke out of it at the beginning of the year, after the first rate hike, on and on. Now we have this sharp increase, sharp, and that's just what really bothers me. IWM, we looked at the Qs, we looked at the SPY. Let's look at the SPY one more time here. Same type of deal. This is a weekly, right? So here's a 1 week reversal to retest. He went from 203 to 192. Okay. All right. So, what's that? We're going to reverse the next time. It's 2014. Okay. So that was the bottom of the dollar, and interest rates, the front end was beginning to move. Okay. So like I said, whatever you're in, whatever, if a lot of your other things that you have, be very vigilant, or, write some calls against them, to collect some premium if we do get whippy up here. But the thing is that, just the angle of it all is just so sharp that there's just no room for error. And then today's trade, even though we're talking holiday type deal, this is the shakeout. Okay. And then we traded back the other way, and then we kind of traded down towards the end of the day. It is quiet, it's this time of the year, things are kind of quiet, but a lot, my deal is, going into the new year, we have to be very cautious on this here. But if we're in the bullish case, just some sort of sideways and let this digest, because if this thing does continue on with the same type of giddy attitude on there, there'll be even more air underneath this thing. Okay. Because you want to try and, you don't want to make it too frothy. We've moved at a pretty decent clip here. How many months cited? July, August, September, October. We bottomed here. Okay, same type of deal back here. So yeah, just like I said, just be careful on that. So I'm going to leave this one as this, basically just warning you. Just be very, very careful here. Because the deal is the markets are all 24 hours a day. We saw with what happened with the election, the cash people were very lucky, because I'm going to assume if on the election low, if cash was open, you'd need even more funds to support the thing compared to just the future side of deals. It's the cash side. So be very, 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 cautious here. That's what I'm gonna say. Well, good going, Kev. There you go. If I showed up and was like, "Woo, we're going to the moon," you want to check my sanity here. But yeah, it's just like I said. It's the peak on the. Let's see here. All right, I changed screens here. I'll just go through these real quickly with you. These are charts that I came across today. Of course, I'm looking, I shouldn't say I'm biased, but what I'm looking for are, I go through a lot of charts, and it basically tells me, I think of these as just all kind of capillaries, but I'm looking for little things that just kind of stand out. Like I mentioned before on this one, this RSXJ. Remember, these are logged charts. This one's moved from 26 to 38. Lots of volume and prices stalled. Okay, and that to me is just a caution sign. One of those where if they had options, you write calls and then buy puts to hold on. Like I talk about writing, 15% out of the money. So let's just say, we'll just say it's $40 or $6, 44. So you'd write, say, March, April, May, you don't mind getting this extra on here for next year kind of thing. So you'd write some options, and you buy the puts just in case the thing falls apart. I'm not saying it's going to, but the whole deal is that all of a sudden you get the last gap, okay, and you get the sideways action here with lots of decent volume here, but prices aren't going anywhere. So for every buyer, you're finding a seller here, okay. Let's go to the next one. Okay. This is McCormick. This is a weekly. I posted a short on this one back when this was making, in my eyes, I looked at it as a bear flag. Basically came down to inside the cloud area. I just throw stuff on here to see what other people are looking at, kind of like my mess up above here. For me, what I'm doing is it's basically all the indicators that, yeah, Kev has all the indicators on there. But the deal is I'm looking for when everything kind of jams up, like here, everything kind of jams up and gets dark, here's where it's at. You can see underneath things kind of rolled over, and that was your RSI divergence, and we came down. Okay. But, as we're looking at this, the market, is some of the indexes are swinging into new highs, right? But here, just this one here, this one's going the other direction. Okay, so I'm trying to see underneath how the legs are looking. Here's one here, this Canadian Natural Resources. It's chopping higher, chopping higher, chopping higher. The bodies are rolling into it, but the it's kind of rolling over itself. So you have the people piling in, but you're not going anywhere on here. Okay, now you're actually trading below last week's level. If this drops, it still has a couple more days, drops, now all of a sudden you're at a 2-week low and the bodies have rolled into it. And you go back to the big picture, basically 46.74, 46, you have a wider double top on here. Okay. And what I'm doing is just looking at the underneath and seeing how everything kind of looks on here. All of a sudden, if you're getting these divergences, prices are coming down and bodies are rolling in, something's not right. Okay. Jack Henry. Okay. It's marching higher. Higher high, higher low, higher high, higher low, blah 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 blah. Here it dips below it. Okay. Once it dips below here, this is usually a springboard. But if you look at this bar here, traded higher up into R2 and then reversed. This is a weekly, right? Yeah. So it basically Monday opened here, Tuesday, Wednesday, Thursday, they traded up, and then by Friday came back down. And now this week we have a little red over here. So here's where it tried to break out and failed to do so. So it's one of those, like I mentioned earlier, you have to be cautious that if these things are going to break out, they have to keep on going, once something's in motion, that kind of deal. This is Netgear. So Netgear here, you had a large sideways pattern 2013, 2014, 2015. Strong volume broke out, came back about halfway, retested. Okay, that's how you look at it, is it retested the breakout area, continued on again. Remember, these are logged charts. Pulled back, went up again, but then all of a sudden now failed to make a higher high, and it's trading below this bar. So you're getting people who are selling into the strength on this one here. This is on Netgear. Okay, like I said, there's not a lot of room for error here where we're at. Okay, IIVI, zippity doodah. Okay, so this one keeps on, chugs along. All of a sudden you get a fat bar reversal, takes out 2 weeks of trade. Then you get the giddiness of coming afterwards, pokes higher, fails to do so, and now all of a sudden this bar is cutting into here. So all these people are now out of the money per se, and you can see the unbalanced volume. So as I say, the bodies are in here. Okay, what's this? Electronic equipment. I'm not saying this thing is going to roll over, but what I'm pointing out is that when we're looking at, the SPY and the Qs and the Russell and things of that nature, we're all of a sudden, underneath wherever this one's at, index-wise, it's running into short-term problems. Okay, these are pivots for next year. If it makes a higher high, these will expand. Okay, so what I'm trying to point out is, the same thing here, same type of deal where you break out. Here's where you trade sideways and it marches on, volume marches on, and all of a sudden things begin to quiet up over here. And you have the bodies in here. So you need, who is going to buy this thing? That's the whole deal. And the other one is I'm noticing is that, not all the issues are going with on this, it's swinging to new highs. At this time of the year, things do get kind of quiet. So I have to, it's pointing up. So I have to I have to err on the side of the bulls. Okay. This could just be a healthy pause before continuing higher. But the thing is, I'm trying to point out, as I go through some of these here, you move up. Here's what's this, Synthes Corp. This is the maker of uniforms. Okay, so here you have one where the red unbalanced volume is trending lower, but prices went higher. So you have people who are actually selling into this here. Okay. Remember, these are logged charts. So you have your mean, just draw a trend line through there, mean. You could actually say that this one's bouncing off the underside of the mean trend line on here. Okay. All right. So to try and go along with the word of caution, right? As we marched higher here, not as many big bars. Okay. And then they pedaled all the way through this here. And then they tried to push one more time. The big bars aren't there. You had a fat bar up in here. I think it might have been earnings here. And we're getting a stall here. Here's a weekly. It's a stall. For best on the bulls, it broke out. It's pausing before it's gone higher. Like I said, as we're going forward here, every day that goes by, we're heading closer and closer to a recession. All right, here's what's this, 13, 14, 15, 16, 17, finally broke on through, okay, this PDC Energy Inc. Okay, so this one finally broke on through, opened up here at the high, came back, reversal, doing the same thing again. So at best for the bulls, it's just a retest, but it says energy here, energy exploration and production. Well, they may be, if oil rolls over, where are we at? Oil. 52.64. Okay. Yes, I understand that there are people in the cabinet and things of that nature, but also remember, it doesn't take much to turn the spigots and that back on. And if you have wells that are sitting there that just have to be uncapped, that compared to exploration and that, following my drift on here, that you're really not going to need their services. If all you have to do is, it's not like you have to go out and drill. You can see that the body is ran in here too. So like I said, it's a word of caution. Now let's take a look at this here in a 2-week period. So we go from 84 to 74. Okay. So this thing's lost $10. Okay. Yeah, Kev, it's still above the breakout. But what I'm saying is that there's no room for error on here for a lot of these. Spirit Airlines, same type of deal here. Breaks on through. For the bulls, we'll say that this is a pause before trading higher, but the bodies are in here. So these are, susceptible of breaking back in. Okay. Same thing here. There's Marsh & McLennan. Here you can see the breakout, kind of like the Qs, where, gave it a shot, springboard up, and then multiple weeks of sideways. There's no room for error here. You can draw a trend line underneath here, and that's not a very good pattern if it cracks on through. But you can see how quickly some of these things, it'll be a precipitous decline if a lot of these begin to fail up in here. We move to a new high and it doesn't work. Here's an interesting one, Tesoro Petroleum. Okay. So on and on and on and on. Now, Tesoro, I believe they're the ones that make money on the sour crude. Okay, so if crude comes back down, I believe that's Tesoro. They use, so their margins are better because they can use the lower grade crude. Okay, so here's the beginning of the year, right? So, I'm all high on commodities at the beginning of the year and it goes the other direction. You get oil to move up, it pokes its head into 54, and all you can do is get about half back. So I typically look at this as a secondary distribution. Okay, you also have the bodies that are in here, and all I could muster is about half back. Okay, now we're, it's one of those things, just draw your trend line. underneath them here, I just have a little moving, it's actually a channel line. Underneath here, there's, I guess I know that there are cabinet people in there and stuff, but the deal is sometimes it doesn't work. Like if you look at the military under Obama, the defense sector, everything went straight up, right? Now it's beginning to roll over. Okay. So it might not seem what it seems. Where am I here? Okay, here's LBJ. Is that right? Tesoro, yeah, LBJ. Okay, this was just a Latin American bull type deal. Basically, I'm looking at it as this is, we'll call it a double top. Red candles down, can't muster much of a bounce at all. This is another distribution trying to hold on. Emerging markets are having a tough time. Basically it's lost its momentum. Venezuela is chaos. You have Brazil that just had the Olympics, and that's always a tough thing to digest. So, at best I can say for the bulls is that it's basically trading back in the channel, but this, with the trading at the lower, we'll say 20%, that's not a good sign. Okay, this thing just looks like it's going to continue to roll on over. And of course, all of these, ETNs, that kind of deal, they all seem to fall apart. They're just designed. You're going to only snag them at, kind of like Nugget and Nug and that JNUG and stuff this year. You had to have gold go up 40%, but then now we're rolling the other way. They seem to both work their ways to zero. All right. Russell, same thing here. You have up, 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 up. This is on a daily up, up, up. Big fat bar, not Russell, RUSL. Okay, this is the opposite of RUSS. Okay, up, up, up. These are volume bars up. On the top bar, right? This is the whole oil deal. Fat volume, okay? That's your climax. Basically gaps down, and now I'm looking at this as a bear flag. Okay, so now you have Russia that's possibly working on a bear flag. In my eyes, like I said, I think a lot of these, if you get a full reversal, we're not going to stop. Okay, here's Gush, the same thing, right? Up, 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 up. With the oil, opens at the high, lots of volume. It comes down, and it's working on a bear flag. Okay. TNA. All right. So we know that there was a lot of call buying going on, and today we basically just crept up with TNA. All right. This is the 3 times Russell small cap. Okay. So at best for the bulls is that it's trading sideways. But you can see today's candle basically, we'll call it an outside day. Okay. Didn't really trade hard. Well, we'll call it shadow it. All right. How I'm leaning this way is basically we kind of grunted and retested the area with the call buying. But like I said, be very cautious. I mean, look at this. This thing can go, I mean, even you have it, it'll drop 10%. Okay. Just by retesting the low down here. Okay, then you have 109 to 90, right? Okay, now this is a leverage deal, but like I said before, we have a lot of call buying. The angle of ascent is sharp. I really don't think that any of these areas are going to hold. Of course, of all things, this has to hold. This area, is going to have to hold here. But like I said, it's one of these things that, every day that goes by, we're getting closer and closer to a recession. Here's GPN. Okay. So this one, here we have all of this year, all of a sudden it's stalled. So at best it's sideways. And we know once something goes sideways for a while, a trend breaks out, right? Okay. To me, this reversal bar here, the chop, to me, it's kind of like we're working on a bear flag here. All of a sudden you go, from 80, and if you lose 64, this thing can vapor down to 50. Okay, and this is a straight up stock. So you go from 80 to 50. Okay, now you're talking, what's that? 20 to 30% drop. Okay, shocking, right? Okay, now just think of that on an index. If you have all these individual issues that just fall apart, the majors are going to follow suit. Okay, it's the same thing here. If it's basically, you could just, I guess you could kind of say that this is a head and shoulders here. What is this, a weekly? Okay. But the deal is you draw a trend line underneath it. It lost it. Now we're working this way. We have a couple days left. I'm going to lean towards the bulls for the GDP to pull this thing together here. But if there's any failure whatsoever, there's no room for margin on this. The amount of gusto that went into the move up, the chasing after it, and all this, the giddiness for the election, if it doesn't pan out, there's going to be a lot of air underneath this. This was interesting. I'm not sure if we went through this one. This is a DuPont, whatever. But what I'm looking at is that these are weekly bars. So here it opened, traded higher, came back down. Open higher, traded back down. So this is multiple weeks. And if you look at today's intraday, like a 2 hour, 1 hour, there's just selling going on afterwards. So they're not waiting around for this at all. Okay. This one we looked at too, where it poked its head up, had the reversal. Now we're multiple weeks of sideways. All of a sudden it cracks the 64, and all of a sudden you're at 57. I'll boom, you're off, 15, 20% in the same month kind of deal. You know what I'm saying? So just be very, very, very cautious. The India one traded sideways, poked its head up, came back down, rolled over on a lot of volume, lot of bodies in this weekly bar. Gave you a little bit, pulled back. Hey, I gotta assume that. Look at here, right? It fell down and came back up and closed there. Those were buyers, people willing to step in and buy the dip. And all of a sudden, we're now trading below it, and now we're trading below that low. So this thing looks like it's going to roll over. Okay, India. Like I said, I went through all the indexes, and India doesn't look good. Mexico doesn't look good. Blah 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 blah. And we're back to all on hope and belief, and blah 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 out of Washington. It's kind of like the doctor. All right, you're laying there in bed. The doctor comes in and looks at your chart. And then he or she says, how do you feel? And you say, great. And he looks at your chart and says, no, you're in bad shape, but doesn't say anything really, unless of course he or she has to. No one likes to be the bringer of bad news. Same thing again here. I think I did talk about this. You get a heavy volume up day, and within a month and a half, all gone. They came back in again, unbalanced volume, could only muster this much. I mean, this is, a lot of these look like they're going to roll over. This was one, what's this, Cranswick. So this is from our European people. You get a run up, and then you trade sideways, and then this bar decides to break, go higher. It opens here, it closes lower on a weekly. So it tried to muster something, and it's not getting it. Okay. And the thing, what I like is that things begin to narrow, so your risk isn't as much. If you decide to go against this here, then you just can probably use this one for on a stop, or you can kind of use a soft stop on here, because when you get to trend changes, things get whippy. And this gold mining one, these gold miners are throwing me for a loop here. Okay. You have the metal, it's dropping. Okay. So, we're not at 1050 on gold, but compared to, the beginning of the year, we should be back down to $4.50 here, but this one's at 10. So something's going to have to give here, right? If this is 1050 in gold and goes up to, we'll say 1400, and now we're down to 1140, 1133. We're down in this area, but these miners are still holding up. So something's going to have to give there. I did point out though that gold did rise, I think from or yeah, 85 to 87. Okay. Here's another one that I think is putting on a bear flag, CRL. Okay, this is weekly, so it goes up and, you know, tries to make a newer high, gets the reversal, red bar, tries to shoot up, doesn't work, tries again, or get a lower high, right? Lower high, comes down, we're beginning to take out, you know, the year's low, right? 65, 50, 67. So all of a sudden now I think we're working on a bear flag here and we're going to head lower on here. What is this? Healthcare biotech. Well, that's not a good thing to work a bear flag into when seasonally biotechs, they have a conference out west and they whip everybody up, and you know, it's not a good thing. You know, it's kind of like, you know, if your news is bullish and your stock is down, that's not a good sign. But here, like I said, you know, 89 to 6, it's what, lost a third, we'll say, lost a third in, what's that, 1, 2, 3 months? You know, there's, you know, 10%, 10%, 10%. You know, it's one of those things, and now it looks like a bear flag. You know, so just like I said, be very careful going forward. This Ray one here, Ryanair Holdings, you know, makes the high, comes back down. Now, to me, it's kind of doing the old bear flag thing again. Buffalo Wild Wings, this is the bear flag that I was talking about. And then we roll over today. Is this before the close? 351, yeah. So this is before I think it dipped a little bit further. But I mean, even if you use, you know, moving averages and stuff, you know, crossed it, you're off and running. I cross back, but so you can see how little it moved on the breakout here before it just started chewing it all up. Lots of volume. Now it's overhead, you know, so you had a lot of volume. There's volume bars on the price overhead. So now if you decide to go up, you're going to have to swallow this, because we all know that once you get one tick in the money or whatever, you're going to sell it. It's usually how humans work. You know, well, I promise never to do that again. You know, but most of the time they end up averaging down and it doesn't work. So here's another one. Like I said, you know, here's the swing, not much, and then boom, it just through the bottom, working on a bear flag. This is Top Build Corp, BLD. Same type of deal. I just, you know, like I said, I'm picking them out as a, you know, here's another one, gaps at the high. And then it's been trading down since then, and it's spiking under. All right. And this, I went back and looked at, this is a monthly on the S&P from 03. We started hiking interest rates, okay? So that's off the bottom. We started in 04 hiking rates, and I think we stopped in 6. So we carried on. But what we did, you know, underneath, you know, if we do continue to go higher, you know, higher low, higher low, higher low, higher low, higher low. This one came down pretty deep. They poked its head through, reversed it, tried one more time, kind of fell back in the center, and then that was it. And then we worked on a bear flag for 1, 2, 3, 4 months, okay, in 2008, and then we finally had, what was that, May? Bear Stearns and that, you know, and there it was. But the market had already turned in November of 7, right? In November, yeah, January, December, November. So here's the high, October of 7, then November, December, and then January. So I'm not saying that this January is going to be the same type of deal, but you have one of those where you poked your head through and you came back, made one attempt at a flag, and it was all over with. Okay, so just be very, very, very careful. Here's the current one, right? Okay, so this is off of 09, higher, low, la, 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 la. This was a little bit on the deep side here. This one came close. This one's close again. Okay, this is going to be your springboard, but your angle of ascent. Let me go back one. Okay, so here was when it broke R2. This is the R2 of the following year. So 2 R2s in a row, right? Yeah, R2, that was a snake right there, snuck on in. That year, close again. This one went through it. Following year, now it's mechanical and they're logged charts. So it's just a mathematical deal. Couple of bars up, whippy, and then that was it. Momentum indicator, all right? So where are we at? This is current, kind of deep. Here we go. You know, so like I said, you just be very careful that we don't get something in January. What is that, about 210, 208? All right, that's go off of the previous monthly low, depending upon if we run or not. Okay, because like I said, I'm just very concerned about the angle of ascent, and this is just straight up. This isn't a logged one, but I threw this on here. Somebody wanted to look at, all of a sudden you're moving at, like, say 30 degrees, and all of a sudden you move at 45, and all of a sudden things begin to go towards 90 degrees. Okay, so just a wee bit of caution on here. And this is a United Health, right? Something going to happen with healthcare. That's the other thing too, is if we have national healthcare, what happens to insurance companies? Kind of interesting. This one here is, I have the bullish percent of volatility divided by the CBO S&P 500 VIX. Okay, so what I did was, we'll say VIX goes from 0 to 100. Okay, it doesn't get to 0, and we're at 87 I got up there. But basically what I did is the bullish percent. So you can have 100% of the stocks in a bullish phase, and what I did is I just I'm looking for, since the VIX is dropping, to see if I'm getting a spiky high again on the on this ratio. Okay, because what it is VIX doesn't move much, plus or minus type of thing, but all of a sudden underneath it begins to break down. Like this is from going into November, December, and then interest rate hike, and then we rolled over. So there were telltale signs here, right? Telltale signs. This is moving into Brexit. We're moving in again. This is the election low. Now we're springing forward like this. So, looking for some sort of where the underlying stocks are beginning to lose it. And this, I think the next couple, value line. Okay, so what I wanted to point out was just between a logged chart and an unlogged chart, our angle of ascent with an unlogged chart is getting to be pretty 90 degree-ish here. Log charts work, I like logged, like percentage charts, because of, down here, it doesn't look like much, but it's a double type of deal, and here if it doubles again, but the angle is so much sharper, it's done the same thing. Here's the value line. Here's going back from 1975. This is a logged chart. So the value line is basically holding, it's just a straight line, okay? But it's getting to turn up just a skosh here. This is the geometric. There's two kinds, arithmetic, right? Arithmetic, and geometric. One is basically kind of like the mean of the average price of the stock, and the other is, I think, kind of alpha weighted to your, how would your issues do in relationship to the total market, I believe. But the interesting thing is, here's the peak here, here's the peak here. When we hit the peak, we rolled down this year, and we're at this area, right? So it's just a reference point, where how is this in relationship to what you're watching overall. Here is value line dividend index. Now this was the first one I saw that things were kind of waning. All right, so this is the pre-election low. Then we took off running with the Trump deal. We had this. We ran up. You can see the unbalanced volume move into this deal. Decent volume, right? Okay. And then it's beginning to wane, so it's almost like we're going to take out this low before we take out this high. But like I said, I just want to make sure everybody is cautious per se in going forward, that with these breakouts they have to hold. They really can't come back in. What do we have going on here? So 03, this worked, right? This was tagged. About 87. 87 was tagged. We came back a second time here. All right, caution, caution, caution. You can drop these down probably to a daily, but like I said, I just wanted to go and these are logged charts. We're breaking out. I'll treat this as the retest. We're moving up, but we're moving up at a clip. There's just no room for error for right now. So there you have it. What is this moving average? This is 9 and a 40 months, 9 months. You'll know it too when it's happening. If you run a business or whatever, I remember in 2000, August of 6, here in Havasu, it just became deathly quiet. Like the real estate and everything, these guys are pouring concrete at 4 a.m, breaking the law. They were awfully quiet. Hey, what's that? But you could tell where I live in Havasu, where the cherry on the sundae were the last thing to put on and the first thing to fall off, because we're basically second property to California. So I learned about elasticity with California. And here I am jumping up and down. It's not going to be pretty. What are you talking about, kid? Yeah. So there you have it. And then, like I said, just be very careful. Very careful. And S&Ps are down. S&Ps are down 3 still. All right, everyone, have a wonderful evening.